What if you can build a trading algorithm that learns how it's failing and how it's succeeding and adjusts itself so that it continues to improve over time? That's what we're going to talk about on this episode of the Independent Quant. I'm the founder of the Independent Quant, Luis, and we're going to walk through my goal of building an agentic AI trader. So let's jump right on in. Okay, first things first, I am a trader just like you. I am not a financial professional. Nothing that I share here is a recommendations for trades or positions you should take. This is all for educational purposes. All trades you take are your own. So, what are we going to talk about in this episode? We're going to talk about building an agentic AI. We're going to go through the whole purpose of what is agentic AI, why do we want to use it, what's the problems that I've found with uh, trading research out there and why that creates an immense opportunity for you and me. My approach to creating my first iteration of this agentic AI solution for trading, how I architected that solution, what the data engineering, meaning the data flow for that is, and finally, how I'm deploying that solution. Big thing that I want to share for full transparency is that I'm actually recording this after the second week of development, entering my third week of development. So I am recording this as if this is the very beginning of this project. I share that with you, one for transparency, and two is I don't want to make it sound confusing if I go through here and I may say something that's in the future. Cause you to think, how would I know something like that if I haven't started development? The reason is because I have started development and I do know some answers as I record this. But this here, the purpose of this video is to establish what's going to happen going to the future. And you can follow along. Well, this project is I'm going to publish every week where I stand on development and what this looks like, how successful or unsuccessful it's been, and whether or not it's a worthwhile effort for you to take part in. For you to really keep in track with me as how this is going is if you head on over to the Independent Quant, sign up for the newsletter. It'll get dripped over to you. This will be part of that content as that comes to you is everything that's happening in building this algorithmic trade desk. The other thing that I want to share with you is that I don't use AI to create my content. I do use AI to create my code, help me with my development, and I do prompt it to give me images, which is some of what you'll see here. But the content itself is not AI generated from the standpoint of AI completely did on its own. I had a vision in mind. I had something I wanted to communicate with you specifically, and I prompted AI so that it could give me a much more professional image. You'll see when we get towards the end of this presentation, the images are mine that I created myself, and it'll be very immediately obvious how I am a solution architect, not a graphic designer. So, and you'll see that at the end there. But I want to have nicer images to communicate at least the beginning points with you. So that's the extent of AI in this presentation. So let's get over the overview. And the very first most important thing to talk about is what is the difference between traditional algorithmic trading and what we're trying to do here with agentic trading. Traditional algorithmic trading, if you've been following along with the Independent Quant, I've been trading for about 10 years, about 2019. At the same time that I went live with my trading using my own live money, I also started coding strategies in the IT software development world. Coding is part of my kind of my expertise. I started coding my own strategies, um, and that was using traditional software development methods, which, this would have been 2019. So it's pre AI. And what's unique about that is that it is rigid, right? You have to explicitly code what it is that you want the computer to compute, how it's going to make its decisions. If you're going to try to state what variance you're able to allow, you have to explicitly tell the computer what those variances are. Then you back test these very strict rules, and those are now used in the live trading environment after you've determined that, yeah, in your back test, this is something that works for me, and what works for you, what works, you can, again, go back to Independent Quant. I've got a whole series of videos on how this gets done. But it's the way we've had to do it now for decades, right? It's how we even code all our software today. The problem with that is the markets are dynamic. They change, they evolve, they react to what's happening in the world, and our code can't keep up with that, right? Because it was written to perform under certain conditions. Once those conditions change, the algorithm stops working. Now, sometimes the change isn't dramatic enough that maybe warrants a whole new algorithm. Maybe it just needed to be tweaked. So wouldn't it be great to have something that could learn that and at least within certain constraints, change its style to accommodate what's happening in the market? And that's what agentic trading is, the promise of it. It uses workflows, agentic workflows. We'll get into what that means here in a minute. It'll adapt to market variance. It learns from edge cases. It'll shift according to what's happening in the market. And the big one is it's learning as a computer learns, not like you and me learn, but learns how to best implement the strategy and keep striving to a certain goal. It's a next step beyond what would be reinforcement learning. So that the promise of agentic AI. We are very much at the beginning of the road for AI in general. So that this capability exists, but it's in its infancy. So what you and I are about to start doing here and building this agentic AI solution, one, there's a learning curve, is something that I have not seen done. I have not done myself. So it also hasn't been able to be done until about this time. So let's take a look as to what an agentic workflow is. Okay, so what is agentic AI? Agentic AI, if we look at the spectrum here, I've got it sandwiched in between two other images. We got Gen AI on the left, automation on the right. Gen AI is what a lot of the general public is familiar with, which is ChatGPT, Claude, these services that use a prompt. You prompt the service to provide you with content, and it's using a knowledge base that it's been trained to generate content that did not exist before, hence the generative AI, that meets the requirements of the prompts you just gave it. And we can do everything from text, images, and now we see videos, we see music being produced. All of that is generative AI. It's very prompt based and it does not act independently because you do have to prompt it to get that action out of it. We take the other extreme of this, which is automation. Automation does not have to use AI. It is simply a way of taking a process flow that is rule based, and you can tell a computer this is the process you've got to go to complete these actions, and then let it do that. You have automated a process. Does so without human involvement, or at least minimum human involvement, but at least going from step one to the last step, it can take care of that on its own. What if we can take those two worlds of automation and generative AI and put them together? We get agentic AI, also called autonomous AI. This is goal-oriented. It acts autonomously, meaning it does not require human intervention. It looks to achieve a certain specific goal, and it goes through a four-step process on its own. It plans, it executes, it learns, and then it adapts based on what the outcomes were and what its goal is supposed to be. It can see, is it getting closer to its goal, further away from its goal, and what it needs to do to bridge that gap. Now, why it sits in the middle is because usually there isn't one agent, or like let's say an LLM, one single LLM that's doing all of this. There's usually different components that are performing a piece of it, and then all of this is being orchestrated by the agent. So that orchestration and the work through of those four is what yields just an automation element to it. I'm gonna pull up an image on what that looks like. So this is what I just pretty much described in the last slide: is a agentic solution, an agentic AI. The workflow is it perceives its environment. It knows where, what data it's collecting, what that means in the scope of things. It understands what the goal is. It generates tasks and actions for itself to achieve that. And then it sees the outcome of that and gauges if that's getting it closer to its goal or away from its goal. And it makes the necessary adjustments because now it pretty much redefined its environment to then make better decisions so that it achieves its goal. That's what agentic AI is. Where are we going with this with our trading? So why agentic AI? The whole autonomous strategy adaptation, that first bullet there is, I say, the major reason for why I'm even exploring this whole process, right? Because when you have multiple strategies going and they're all via the traditional sense, you now have to keep on top of them, understand when they fail, when they succeed. You have to, there's only so much automation involved in them, but there's no adaptation. And that's what agentic AI is that's the promise, right? Like I said, we're at the very beginning, so it's not doing this just yet, but how well is it doing it today? It may be doing it well enough today that we can create strategies that capitalize even where we are today. Maybe by next year, 2 years, 3 years from now, we could be completely maybe just expressing the goals we want out of a strategy. Maybe it'll develop itself. I don't know. That's speculation, but who knows who knew we were going to have AI impacting us the way it is today? It's not, I don't think it's fully capable to do as much as people think it does, but the things that it can do really well are game changers. So maybe where we are today is enough to start doing some of this autonomous strategy adaptation. Just like the traditional algorithms, it can do rapid pattern recognition, it can do high speed execution and reaction. So those two elements is something that inherits from the traditional way, which are great attributes to have. And then when you add that fourth bullet of having now a more robust way to do risk management, rather than the way that maybe traditionally we had to completely codify what that looks like, that opens a whole other door to better manage our risk. Now, all that sounds great. Why isn't this getting greater adoption? Now, it's getting a lot of adoption and a lot of research in high finance, but for you and me who are independent professional traders, why haven't we seen it as much with us? Well, I'm going to touch on that right here. So I'm going to go on a little bit of a soapbox. This is going to be very opinionated as far as AI research or just research in general and execution, right? I believe academia exists for its own reasons, and then the rest of us live for our own reasons, right? For AI research, I found this paper. I'm constantly reading, getting better at trading. It's something I've done from the very beginning of my trading journey. It's what makes you and me, I guess, the same while you're watching this channel is you're looking to get better. And I'm looking to get better every day too. And this paper was one that I pulled up, which was AI trader benchmarking autonomous agents in real-time financial markets. Let me pull this paper up because I've got it downloaded on my computer. Okay, so here's the paper. I'm zoomed in on the abstract. I'm not going to go through the paper. It's 17 pages. I'll have it accessible on the Independent Quant website. So if you want to download it and read it for yourself there, I'm pretty much going to just stick to why I think this is important for you and the problems that it presents that I think are kind of ludicrous that they're even problems, right? And with that, I say is I had an instructor tell me at the beginning of my trading journey that researchers are not traders. So he gave an example, Black-Scholes. Black-Scholes developed the partial differential equation that is used to this day. They did it in the 70s, got a Nobel Prize for it, for how to price options. They themselves were not traders, but they gave this massive gift to all of us by way of that product that they created of the Black-Scholes formula. I took that as an anecdotal thing. I'm like, okay, well, that's one case. But the more I've read on just journal papers, and this pretty much drives home what's going on here. This is published in, I believe, December of 2025, if I'm correct. Again, it's researchers not being traders. And that is kind of alarming as far as what their finding is. Two sentences that I really want to focus on here. Large language models have demonstrated remarkable potential as autonomous agents approaching human expert performance through advanced reasoning tool orchestration. That is exactly what we're going to be setting out to do right here in this building the first autonomous agent is understanding that we can use these large language models to do a lot of what you and I are doing when we're looking for trading opportunities. And it's good to see that, yes, it's true. I didn't just come up with this. There are other people much smarter than me that have identified that these LLMs are giving us a huge benefit, that could be leveraged for trading. Now, what's alarming is this next sentence down here, or really it's the next several sentences. Our analysis reveals striking findings. General intelligence does not automatically translate to effective trading capability, with most agents exhibiting poor returns and weak risk management. We demonstrate that risk control capability determines cross-market robustness and that AI trading strategies achieve excess returns more readily in highly liquid markets than policy-driven market environments. These findings expose critical limitations in current autonomous agents and provide clear directions for future improvements. I was blown away by that finding. I read the paper. I'm reading out of the abstract. They go into obviously a lot more detail into it, but to me, being a 10-year professional trader, that is not a finding, right? Like that is, if you've been following me along this far along, you understand that the way I've been trained and the way that I understand all professional traders to be is profits are a byproduct of sound risk management, right? We are professional risk managers first. So that risk management was something that, oh my God, it is what made or break these strategies. And then that the strategies were most successful in highly liquid markets. I mean, that's par for the course. I mean, no, you shouldn't have to, there's nothing new about that. That's typically how most of us are trained, don't trade illiquid markets, don't trade illiquid products, look for liquid markets, look for a place where you can execute good risk management so that you can get the opportunity to have a profit. So I kind of found that very alarming for me, at least. But the beauty of it, though, is it shows that there is an opportunity. If that's already how you and me think, is that I've got to start with risk management. And if I start with risk management, maybe that's the door that's opened with using these agentic AI solutions to get this goal that we're going for. So the problem that this researcher found is not a problem in my mind. That is just being a trader. So that's the opportunity I found with just research in general. So given the problem we just discussed, what is then my approach to this AI trading? So 3 things. You come to know me, you know that by profession, I'm a project manager and a solutions architect, specifically specializing in AWS. So I have very much a systematic way of approaching things. So that is my first step, is focus on the system, not the trading. Focus on the system. Utilize AWS services to build this agentic solution. I'm going to use services as much as possible. I'm going to create a RAG to have the model refer for information as to when to trade. Next, I'm going to limit myself to one strategy. So up to this point, I've been using a rounded top, rounded bottom strategy for the last 3 years for my day trading. That's what I've been using exclusively the Euro USD currency pair. I'm going to take that and have that be the focus of this project here to see how to do this. I've got a trading journal where I'm going to use as my RAG. If you want more information on those first 2 steps or what I'm talking about in this bullet here, I do have a video on the site about how I failed a prop eval challenge, and I touch on the point of that strategy in my trading journal for the RAG. Now, with those 2 first steps, I'm pretty much creating an MVP, and I'm creating something that is exclusively to trade this one strategy, which means the architecture is not going to be good for other strategies. But given that I don't know what an agentic architecture would look like for trading, I'm going to do what we IT professionals do best, which is iterate my way until I get to that final solution that solves it, which gives us now step number 3, which is I'm going to then, after I get this to work, I mean that number 2, that one strategy's architecture to work, I'm going to find how to generalize that architecture so that I can then start implementing the other strategies using that agentic solution. One of the efforts that you'll see on the Independent Quant is I've got a 50 strategy plan. Depending on when you're watching this, I may still build at the beginning or somewhere in the development of sharing 50 trading strategies algorithmically, using the traditional algorithm methods to kind of implement and walk newer traders through getting into quantitative trading. But my goal then is to take this generalized architecture and go back to those 50 strategies and convert each one into an agentic solution. So That's the game plan with all this, and I really hope you're as excited as I am and want to follow me along. And again, if to do that, head on over to the independentquant.com. You'll find the link somewhere along this video and sign up for the newsletter, and you'll get this drip to you as each evolution goes. There's no cost to the newsletter, no cost to being part of the community. Just look forward to just getting your feedback as we go through this. Okay, so that was the game plan. So how do we architect a solution for that, right? So this is very much my wheelhouse. As you can see now, the diagrams have gotten a lot less attractive. Now you know I built this. This is not AI doing anything here. So like I mentioned, I'm a solution architect. My expertise is AWS. So whenever I need to build something for myself, I go to AWS. So this is not being promoted by AWS in any way. I'm not sponsored by AWS in any way. This is purely because if I was a master at any type of architecture, using any tool for architecture, it's AWS. So go with what you're good with. Now, this here isn't a full architecture. This is purely to express an idea. This is where I start whenever I'm architecting a solution, which is, well, what are the different microservices that I would need in order to get the minimum functionality that I'm gonna need to execute the strategy. So looking at the rounded top, rounded bottom strategy, one of the things that I need to do is when I'm trading it, is read the chart, understand when a rounded top, rounded bottom is developing, get ready for it, take measurements, and then identify when it's fully formed, and then take the next series of actions, which is check the risk, make sure that it's in compliance with the constraints that I have for myself or the strategy, and then take action on it. And then ultimately I store all that, I log that, I journal it, and I learn over time for myself. That's my workflow, which is very much an agentic way of doing it. So, and one thing I mentioned why I also start with this strategy is this is a systematic trading strategy, but it has a lot of discretion in it. So that discretion is what limits or prevents me from maybe able to use a traditional method or traditional algorithmic method to address it. Enter this agentic AI. So what I just described there is the action groups. I could convert all those actions I just made about identifying the rounded top, identifying the rounded bottom, the rules, blah, blah, blah. Boom. Each one of those is an action group. If we look at the middle of this diagram here, those are Lambda functions. Those are functions that are run on AWS. It can take no more than 15 minutes, and it does an analysis as to different things. So that's the heart of the system there, those 4 Lambdas. And I'll get into more detail on each one here. Just kind of starting there, and then I'll kind of expand out. Then I'm going to have, okay, there's got to be something that kind of analyzes and orchestrates these and understands what to do with them. And that's what Amazon Bedrock does. Amazon Bedrock is AWS's AI solution. It doesn't have a single model. You can use a whole series of models from ChatGPT or anything from OpenAI, anything from Anthropic. Well, maybe anything. I assume anything because you go in there and it's got an entire list for each one. Maybe it doesn't have everything, but it has quite a bit. Plus, it also has AWS specific models. Then I know I'll need to be able to verify information and ensure that Bedrock knows what the strategy is that I'm doing and what makes it a good strategy. And for that, I'm going to need a RAG. And to do that, I'll need another Amazon service called OpenSearch. So that deals, I guess, with the heart of the agentic solution. So now let's kind of start working through this idea now that we know what we're looking at here. So if I have a client, in this case, what I'm measuring is a lambda, it's not going to be a lambda. Get that? That's me now telling you something that's happening in the future. But a client, a broker that's feeding me information, that data is going into an Amazon EC2 instance, which has a script running on it, a Python script. But now what I envision is that EC2 instance has this flow of data. That data now gets queried by a action group. It's going to make these calculations to see what is happening over the last several candles. Then Amazon Bach is going to look at that and determine if that is or is not a pattern that's happening. And then the way it's doing that is it's going to check OpenSearch That's the I'm pointing all over the place, but that's the RAG again. And it's going to determine yes, no, is it a valid pattern? If it is, it's going to run the risk management Lambda group. It's going to understand where the volatility is by running that Lambda group. And if there is the conditions to enter the trade, it will send that to the Python script, which is on the EC2 instance, and it will execute accordingly. After it executes, Bedrock will be let known that, and it will then direct for the logging of that information. And that's going to be logged in DynamoDB. That's a NoSQL database, also AWS solution. And then it's going to, when it's all wrapped up, as far as the positions closed, just like iJournal, it's going to journal an entry, and all of this information is going to go into S3. And that's really where the RAG is. It's actually in S3. What OpenSearch does is it does a vectorized semantic search, right? So it takes all the information that's in a specific S3 bucket or prefix, and it indexes it so that Bedrock can search through that S3 to get the answers it needs. So that's the big part of here. The outlier there that I've got is systems manager for parameter store. That is more a factor of me, of how I'm going to deploy this. I build everything using AWS CDK. So I don't like redeploying stuff when I'm only tweaking parameters. So I'm using parameter store to save a lot of the parameters that are going to be used throughout that architecture. What you see down the left-hand side, the other EC2 instance, if you go back and watch my video on why I failed the prop eval, I did create a copy trader that took me forever to build. I go through it in that video. It just sucked. But there's going to be another element, but that is not part of this, that's going to copy to a match trader. Like I mentioned in that video, the ultimate goal of this for me as building my own algorithmic trade desk is to trade prop accounts. So accounts at prop firms. So that is what that side of it is doing, is copying the trades over to the prop firm account, while the heart of everything I just described is trading my own personal account. So that's the idea and the architecture for it. Let's now continue on and talk about data flow. So how do I data engineer this solution for an agentic AI solution? Now, we got the source coming in from whichever broker I'm using, and it's going to go get ingested by Amazon EC2, which is going to then be transformed using Lambda functions, which are orchestrated by Amazon Bedrock and used in coordination with Amazon OpenSearch. When I serve all of this, it's going to be served and stored in an Amazon S3 bucket along with Amazon DynamoDB, and it's going to be also served using Amazon EC2. So this kind of shows that data flow that I didn't connect in the first slide of when I talked about architecture, but we can see how the data is going to be transformed and manipulated as we go from left to right. There is going to be orchestration involved in this. A lot of that orchestration is going to revolve around Amazon Bedrock. I usually use something like EventBridge. I don't see a reason to use EventBridge right now. This isn't so much an event-driven workflow, but that is where I stand today as I record this. We'll see how that evolves over time, right? So that is the data engineering of the agentic AI solution. Now, how am I going to deploy all of this? Well, let me pull up my CDK and we'll talk about it. All right. So the way I deploy to AWS, I am not a Terraform user, so I can code in it. It's usually not my go-to. I usually stay with AWS native resources. So with that, I use CDK, specifically TypeScript CDK. And what you're seeing on the screen right now is my GitHub repository. You see, I'm working on it right now. I haven't committed changes, and I've divided everything up into stacks to deploy via CloudFormation to AWS so that I can run all this. This is how I am going to deploy this solution to the cloud using Amazon CDK. All of this is a private GitHub repository that also is on my computer naturally. And I develop here, push to AWS, do testing. Eventually, the next phase is going to be is once I get all this working and connected to the broker, I have a SIM account with a broker. It's going to run this strategy on that SIM account. Once I can see it work and can trust it, I will sign up again for a prop firm account and have it run there. So, um, how long is it going to take to go through all that process? I don't know. Hopefully, you know, we can see how this performs uh, using this one strategy and all the different components to it. I'm in no rush to lose money. So I will stay in this development mode to learn how to build this agentic solution. And once we get this one working, then we can start getting to that next step, which is generalizing it so that we can do more. So in essence, I'm gonna be learning in public. You're gonna see me fall flat on my face, which I can tell you is what happened at the end of the first week, but you're gonna have to watch that video to figure out why. Just be able to follow along as to what's going on here. But what if the promise of this can be realized? It's a gold mine. Right? That this is what you and me have thought about when we think about using coding to solve our problems, right? To solve our trading problems. If you're as excited as I am about this, please head on over to the independentquant.com, sign up for the newsletter. I will also be recording videos where I go into a lot more detail as to what is happening, which I will not publish on YouTube for security purposes. But if you're a free member of the Independent Quant, you'll be able to see some of that content. As we're standing right here, that content does not yet exist. I am migrating the site to a new server as we speak or as I record this. So there's some challenges that are happening over on that end that need to get resolved before that piece starts happening, but that will start happening, right? A lot of this, just like you wouldn't share your trading strategies out with the general public. I aim to do the same. So I will limit this to purely those that are part of the independent quant community. So until then, I look forward to seeing you at the next video where we talk about what the first week of development was, and then in future videos as to what this round the top, round the bottom agentic agent is going and how it's doing and how it's performing, along with all the other content that I've got for you at the Independent Quant as well. That's book reviews, that's systems talk. One thing that I provide is how to approach trading systematically, meaning trading systems, not the actual trading itself. That is, if you can build systems, then trading systematically is just an extension of that, right? I don't find that there's a lot of us talking about actual the systems for trading, and that's my forte. So if that's something that intrigues you, head on over to the Independent Quant and sign up for that newsletter, and I'll see you next time. And until then, keep it green.